Okay, all right, here we go. I am going to break down my edge. I'm going to do my best to define my own edge. So here we go. Usually I'm going to start on the weekly, daily, 4 hour, okay? And I will mark out fair value gaps on the large time frames, and I will mark out high and low liquidity, okay? For example, this is obviously a low down here. This would be a low right here, and these would be highs. So that's the kind of things I would be looking for, paying attention to. Okay, obviously, this could take a really long time if we're way down here, right? And I'm looking to hit up here, and this is a daily chart. Obviously, this is a really long time to play out. But I need these on my chart because if we come into a weekly fair value gap, I need to know we're there. I don't want to be so focused in on the 1 hour that I don't see it. Okay. So just something to be aware of. So the high time frames, I make notes. A lot of times I'll just open my chart and I'll just remind myself, look, there's a fair value gap here. There's a fair value gap right here. So I will just make mental note and on my trading day and just pay attention. And usually I clear my charts every day. Okay. So daily, weekly, I am looking for highs and lows on the structure. I am looking for fair value gaps, and I do pay attention to maybe like breaker blocks and stuff like that. I don't get too crazy on the high time frames. I just want to know where the internal and the external liquidity is. That's about it. Okay. Now, when I drop to a 1 hour, this is where I'm getting more into what I'm actually looking at for trading that day. Okay, so here was a nice little market maker model. We're going to have a video on that. But I was saying here, we're on the the sell model here, and we're on the sell side. Once we turned and we changed, okay, and we got the big displacement back up and we started pushing, then this is obviously a buy model. So this is the buy side. Okay, so here I'm trying to long, here I'm trying to short. All right. So now that we've pulled back on this side and where we've been going, I've been trading a lot of longs. I did trade a couple pullbacks, but I am way more cautious when I know I'm trading against the trend. Okay. So the high time frames, yet again, on the 1 hour, what am I looking for? I am looking for fair value gaps. I am looking for highs and lows. I mean, look at all these equal highs up here. Okay. These were all pretty equal highs. All right. I'm a big trader in time-based liquidity. All right, so session highs and lows I pay very close attention to. As you can see here, we have the London and Asian highs and lows right here marked out on the chart with these little boxes. This is the Asian, this is the London, and then this is New York. So those are something that I pay close attention to. We'll have that in time-based liquidity video for you. I'm just trying to give you an overview of what I do, actually defining my edge. So from here, so here I'm bullish. Okay, so on these days when I come in, and if we ever do get like a run of the lows and we're on the bullish side, then I know that I can look for longs. Once we start moving for the day, like here's a good example, right? We open and we come up, right? And then we end up at some point, like when we opened here, we went down, we flushed this low, and then what did we do the rest of the day? We just pumped. Okay, so that's just something to know. I also only trade Tuesday, Wednesday, Thursday. Sometimes I will play a TGIF setup, but usually I don't, because usually I'm not even paying attention. Okay, so I am one of those traders who only trades 3 days a week. Some people think I'm insane for that, but those are the days that I do the best. So I just don't mess with the rest, I guess, to drop a rhyme. Why not? So Mondays and Fridays I usually skip. It doesn't mean I don't watch the market. Sometimes I use Monday and Friday as a training. I'm a big component of like trading psychology. You guys will see that as we get through the course and through some of the books I recommend. And I train myself specifically to not trade. So to stare at the market and not take a trade, even though you see a setup, is harder than you think. Okay. So anyway, so high time frames, you guys know I'm looking for points of interest. Okay. My points of interest are going to be internal and external liquidity. So fair value gaps, breaker blocks, and then external liquidity, which would be like equal highs, lows, like here's a good example right here, right? kind of have equal lows right here and right here. So once we swept, I could have been looking for along those days, right? Okay, and that would have played out nicely. All right. So that's usually what I look for. Okay. Once we get major displacement in the opposite direction, then I will start looking for something in that direction. Okay. So that's the high time frames. If I drop down to like 15-minute, this is where I handle or work with structure. Okay. Excuse me. So, like, for example, we start pushing down, we come into this day, we sweep time based liquidity by coming up above the Asia and London high, and then we start displacing down. Well, what am I looking for now? Now I'm looking for shorts. So my short may only grab, like, depending on what the low time frame looks right here or right here, I may only grab like right here and down to here, and then I'm done. Okay. But that's what plays my trade plan. Okay. So this is what I'm looking for. I have time-based liquidity. So I usually use the 15-minute for time-based liquidity. Sometimes I drop to the 5 depending on how scalpy I'm going to get. Okay. So 15-minute, I'm considering the structure, the displacement, and time-based liquidity sweeps. Those are huge. All right. So those are what I'm looking for. From here, so that's the 5 and the 15. I want to say that's the 5 and the 15. So a lot of times I try to stick to the 15, but so those aren't days I traded. I took a long somewhere in here. But anyway, I'm just trying to get to a thing here. All right, so I do pay attention to macros. We will have a video on that as well. So macros, as you can see, these are the ones I pay attention to, 8:50 to 9:10. Usually I don't even trade that early in the morning. Sometimes I do, sometimes I don't. Pre-market is kind of like, sometimes not. But these macros are something I pay attention to. If I get my setup inside of a macro, or if my setup, all right, here's a great example. Okay. During a macro, well, we kind of created a fair value gap. Okay. It's not really. All right. So let's just pretend, for the sake of what I'm talking about, if this had created a fair value gap right here, okay, and then we come back into that fair value gap and I start to see a rejection, I'm definitely going to be considering a nice little short. Okay. All right. And coming up under these lows right here is definitely where I would have taken profit, because this is just a point of liquidity here that if we were just going to flush it and keep going, right? Because remember, I was talking about this being overall bullish. So if I'm taking something against the grain, then I'm going to, take profit early. I'm going to lock it in, and I'm going to make sure that my R&R is correct. Okay. So let me just look really fast. So here, I would probably have gone above here. And yeah, I definitely would have been taking that trade. It's not a super high R&R, but if I risk 300 to make 600, that's great for me. If I risk 1,000 to make 2,000, that's great for me. It depends on what risk level I'm at and what I'm working with, and we will be going over some of that math later in the course. So that was just a little example. Okay. Another one would be during the macro here, we get this push down, and during a macro, boom, boom, we're pushing up now. So I might be considering this day being bullish after we get, more of a pullback into, and then start looking for continuation. Okay. Right here is a perfect continuation. Here is a long setup that is just on point. Okay. Because it matches the daily bias. And this is something I would have been wanting to hold a little bit longer. All right. We create this fair value gap. During a macro, we enter the fair value gap and we start respecting that fair value gap, right? We come down, we hit it, and then we're starting to move up. All right. So somewhere in here, okay, I would be looking to enter, right? Let's just say I enter like here. Okay. It's not really the best. For me, I would be putting this down here underneath this low, and then I would target at least a 2-to-1, and boom, that's a nice little trade. And you could have held a little bit longer if you wanted to, but I usually close my trades before this. Okay, and this is an afternoon setup, which is usually outside of what I trade, but that was just a really good example of how I pay attention to macros. Okay, now I'm giving you everything that I do. So it's going to be a lot, but just understand that the defining your edge is basically I need to be in my high time frame POIs. I need to be looking for um, lower time frame structure that matches. I need to be looking at macros and time based liquidity. It doesn't mean I need to see all of that. Okay. Um, so for example, this long trade matched my daily bias, which I got from like the 1 hour market maker model that I talked about. Okay, that was that blue curve line. So the fact that we match that market maker model, that gives me my high time frame, right? Like my point of interest is that market maker model. Okay. And then my lower time frame structure on the 5 and 15 minute is showing that we're pushing up, we're going to come back into a internal liquidity, and I'm going to be looking for it to go to external liquidity from there. Okay. So I know that this video is going to kind of be a lot, but this is just how I trade, okay? And as you go through the course, this is really what's going to start putting it together for you. And just know that some of these things are interchangeable. That's why I'm not just like info dumping everything ICT on you, because that's pretty much what happened to me, and it just you get so lost in the sauce, it's insane. All right. Um, so this would have been a nice little trade right here. And on the 1 minute is where I would be looking to actually see this play out. So let me see here. Reset chart. There we go. It's not that long ago. We should be able to get back to it. Where is that circle? There it is. Excellent. Okay. So usually 1 minute chart is where I do execute what I'm looking for. So if we were in this, like this was created right before this macro hit. So we get pushed up, boom, come down. All right, we're coming down where? We're coming back down into a discount range with a internal liquidity fair value gap during a bullish, right, during a bullish day. Okay, so that was nice. This one pushed up nice. Now, what happens if you missed this? Maybe you were having lunch. Maybe you stepped away. Maybe you had to hit the bathroom, right? What do? Well, if it's matching your bullish bias, well, what happened here? Here's another, right? There's a fair value gap right here, and there's a fair value gap, in here. And what did we do? We came back into it. So you could have entered here, and you could have tried to take this. Okay. This one's a little bit harder because, as you can see, the liquidity run was here, but we were looking to expand, right? Our higher time frame point of interest was really that we were going to be pushing way up. Now, I know myself, guaranteed I would have not held this all the way. I would have gotten my 2 to 1 plus, right? And I would have started taking profits, all right? Now, if I start seeing big, massive push in movements like pushing, sure, I'll hold. But a lot of times when we get these sharp spikes, I actually try and time the top as I take profits as I secure, okay? That's me. But what's most important is that you don't let fear have you take profits too early where you're getting like a 1.3 RR, okay? That's when you start to hurt yourself. All right? You really need to make sure like I really try and hold until I am at that 1.7, 2 RR point, which we'll go into that more before I start taking profits, because what I don't mind trying to go for 2.5, 3, even 4 or 5, depending on, the day and what's going on and how strong my conviction is in the trade. I don't mind doing that, but I don't want to give up a 2 to 1, because a 2 to 1 R&R is going to make you money all day long. So why would I be greedy on that? Okay. So there's a balance between that fear and greed and everything. So that's just how. I hope that was a good enough video breaking down what I do. I'm gonna have some documentation on this, because a lot of the stuff I do is actually in my mind and I need to get it on paper. I have written out a plan that I follow, um, and so that's just like something that I need to do is like actually write it down for you guys, okay? Because it's a lot of scratch notes and stuff, which I will get together. The other thing I do consider highly is SMTs. Okay, so when I'm trading, I definitely will look for SMTs, and usually I can just reset chart view and boom, right here's an SMT. It's that easy, right? So SMT right here. This is something that can confirm a trade for me. Okay, so came down, right? Boom. NASDAQ came lower. Okay. Here, let me do this for you. Let me There we go. Let's do that. And all right, close enough, close enough. I'm going to move this over. There we go. Okay. So we have NQ came down, made a low, made a lower lower. All right, but let's look over here. A low and a higher low. Okay. That is telling me that NQ is bullish. Okay. And that the overall market is bullish. And so what I can expect from this is NQ came down and flushed, these lows, which is like, flushing, which would, potentially shows us manipulation of the market. Come down and flush them and then pull it back quickly and fast and hard to the highs. Okay. So the two highs I would have been looking at would have been like right here. Okay. I would be looking to take some profit because of all these equal highs up here. And then also this right here. Now, I would also be looking at the 5 and 15 minute structure as well, because this is all 1 minute right here. But this is just where I would be looking to secure to make sure that if this pulls back and I was maybe wrong, then I would be looking, in case this came down, I would just be looking to take profits and make sure the trade is good. So what I would have done here is once we got this big displacement, probably somewhere in here, I would take the trade because this is a 1 minute. If I just get a 1 minute displacement like that, a lot of times I will enter the trade. So yeah, that's another way, that's another confirmation. So as we start to help you define your edge, okay, we're going to look at the time frames that you're going to be paying attention to based on what time frame you're going to be trading. And what I mean by that is, are you intraday trading prop firms? Okay, if that's the case, yeah, you look at the weekly, you look at the daily and 4 hour. That's really just so you're aware. The 1 hour is really going to be where you spend a lot of your time on for your bias, okay, for your overall bias, because the daily could be bullish, but the 1 hour is playing out a market maker sell model, right? So you should be shorting, but you're like, oh, but the daily is bullish, so I'm gonna be bullish. It's like, well, for that entire cycle of that market maker model, you're going to be trying to counter trade, which is like what I'm famous for. I should nickname myself the counter trader. But so that's really important. But that one hour a lot of times can clear it up. Like if I see equal highs on the 1 hour, I'm not going to start shorting because I that might be pulling up into those equal highs to flush them, then to come back. Okay. And maybe a market maker model is playing out on the 1 hour and I'm trying to counter trade it, right? I'd rather trade with the trend, right? And if it's something you're gonna like swing trade, right? Like if I buy some some Nasdaq and I want to hold it for a couple months, well, obviously I'm not going to be very worried about a 1 hour market maker model. Okay, so but if you're going to be day trading and prop firm trading, you pay attention, very close attention, the weekly, the daily, the 4 hour, and then you're going to drop to your 1 hour for, in my opinion, your actual bias for that session that you're going to trade. A lot of times I only trade from 9 to like 11:30. That's it, and then I'll walk away. If I don't like the day, I'm gone. All right. If I get a lot of consolidation between 9 and 11:30, there's times I'll be like, you know what? Maybe I'll come back to the charts at 12:50, almost 1 o'clock, right? To see like if we're gonna get like an expansive move or a continuation instead of consolidation. But sometimes I just won't. I'll just be like, you know what? I don't do as well in the afternoons. Maybe it's because I'm more tired or whatever it is, but my numbers show me I do better in the morning. So whatever. A lot of times I'll just walk away. So 1 hour bias, and then you're going to look at the 15-minute and 5-minute structure, looking for, kind of the same stuff, but you're looking for more reactivity and entry models, for liquidity flush. Like, look at this, right? We came down, it flushed these London lows, and then it starts putting in bullish price action. Okay. That's something I would have paid attention to. Now, okay. All right. Let's talk about this real fast, right? Boom. Okay, this is all liquidity right here. But this liquidity got flushed. If the market had come down, give me my path, give me my path. If the market had come down, I don't know if you can kind of see that, and it came down, right, and didn't flush, okay, and did this, what am I looking for now? Like this day right here, I would be looking for it to flush and then go. All right. But what did it do? It flushed it prior. Okay. So I would see that and it'd be like, this might end up being just a bullish day. It may or may not. Okay. But that's just something I would have taken note of. All right. So little things like that on the, I know this was a 1 minute, but this is going to look roughly the same on the 5 and 15. So fair value gaps, breaker blocks. On the 5 and 15, I'm looking for internal to external liquidity, which we're going to have videos on, so don't worry about that. But basically, what I would be looking for is internal liquidity. So we're going to come down, we're going to hit internal liquidity, and then we're going to move to external liquidity. Okay. All right. So there you go. And then the 1 minute, that's where actually I come down and I'm looking for my execution. Sometimes I do drop to the 15-second. Not necessary. It is not necessary. Sometimes it's just, sometimes I feel like sniping and I think I'm a sniper, and sometimes it works, sometimes it doesn't. Okay. So um, one more time: weekly, daily, 4 hour, you're looking for points of interest. You're looking for internal, external liquidity. You're being aware. All right. In your mind, you know that that weekly double high could take a month to play out. So it's just something that you're taking note of. Okay. Now, once we're in that, once we flush those highs, now you kind of know that you're in like no man's land. We could do a manipulation move and then come back down into an internal liquidity, or we could flush those highs and then just have a massive continuation and just keep going. Okay. But just being aware that you're inside of that liquidity, that weekly liquidity, can help you. Weekly highs, weekly lows, daily lows, things like that. Fair value gaps, breaker blocks. Usually don't look too much beyond that. There's manipulation blocks, there's wicks, there's all kinds of stuff. We're going to teach all that, and you can decide what to build inside of your edge. Okay, so then we drop to that 1 hour. This is where we're looking for market maker models and structure. We're looking, same thing, internal, external liquidity, fair value gaps, and breaker blocks. But this is going to be more intimate data. Okay, this is going to be more of a like things could happen right now. Okay, and I need to be aware that we created this fair value gap, because if this market starts to push down and we hit this fair value gap right here, I could start looking for a long if I feel like we're going to move to internal liquidity and then we're going to come up and go past these highs. Okay. Internal, external liquidity. This is where I get my bias. All right. Drop to that 15, start looking, basically for the same stuff. This is what people say when price is fractal. All right. I'm going to be looking for 15-minute structure to pay attention. All right. Seeing that the market maker down here is starting to play out. As you can see, the 15-minute, like there's not as many candles as you would think in a day. So I'm not like, I take a look at the 15. I'm like, ooh, look at this. Like this high right here, I'm going to pay attention to. This low right here, I'm going to pay attention to. Now this low, what did it do? It swept those London lows. Okay. London swept Asia, and then we swept London. So I would be potentially bullish here, especially with this nice big wick. All right. And then that doesn't mean I just jump in and go. But what did we do? We came up. We went to external liquidity. We flushed the highs here. Okay. We flushed even this high and this high and this high. These are all time-based liquidity highs. Then what do? We come back down. Where did we go? To a fair value gap, an internal liquidity. Then where did we go? We went to an external. Okay, past this is the external. A lot of people could have traded from here to here and been very profitable and walk away. Done for the day. What are you going to do the rest of the day? Oh, I'm going to go hang out with my fam jam. I'm going to go, do a hobby. I'm going to go do whatever, I'm going to go work out, go to the gym. Okay. You don't have to catch the entire moves. Okay. Believe me, you don't. Actually, when you try, sometimes with me, it breaks my psychology, because then I start getting the greed and the fear and all kinds of stuff. All right. So, I mean, once we came down into this 15-minute right here, what can I start doing? I can drop to the 1 and I can start looking for my actual models, which would be almost the same exact thing. Sweep, displacement, fair value gap, breaker block, boom, bang, external, internal to external. All right. So that's my edge, guys. I'm going to do my best to take my chicken scratch that I've been working on for years and years and years and turn it into something that is very legible and digestible for you guys, so you can define your own edge and you can start seeing the success in the market that I have been very blessed to be a part of. All right. Video's over. Later.